Hello traders, you are welcome back to the Forex Geek channel. In this particular video, we are just going to be discussing something interesting. Okay, what if AI could tell you the most effective trading strategies ever created? Well, that is exactly what we are talking about today. After scanning through, different historical trades, and if you also want to backtest multiple systems and evaluate different market conditions, you might actually find out that some of these strategies that I am going to be mentioning right now, might actually fit in within your idea of profitable trading strategies. Okay, so they are not just random setups, they are proven strategies that have been filtered through data and performance metrics basically. So the first strategy that we are going to be looking at is a popular strategy, and if I'm not mistaken, you might have guessed it already. Okay, it's a strategy that involves moving averages. Moving averages are very, very popular indicators that a lot of traders use. Okay, so at the top of the AI's list is this trend following strategy that uses a combination of the 20 EMA and the 50 EMA. So we are just going to be loading the 20 EMA and 50 EMA to the chart right now. Okay, I'm just going to cancel this and this. So we are working with the 20 and the 50 EMAs. Change this to EMA, change this to EMA. All right. So here's how it works. Okay. You just wait for the 20 EMA to cross above the 50 EMA. This signals a bullish trend. Then you look for price to pull back toward the EMAs. Then you enter a buy when a bullish candlestick forms at or near the moving averages. For example, around here, this was an example, okay? Then your stop loss goes just below the recent swing low, which is this in this particular example. And then your take profit, you can actually decide to use a risk to reward of 1 to 2 or 1 to 3 as the case may be, or you can just probably target the nearest resistance zones, or if it's a sell trade, you target nearest support zones if you don't want to use a fixed risk to reward ratio. Okay, so the AI found that this strategy works well, and in as much as you can use it across different time frames, depending on your trading style. If you are a scalper, you can go with lower time frames. If you are a day trader or intraday trader, you can go with a higher time frame, and a swing trader as well. But based on the AI recommendations, 1 hour and 4 hour are the charts that it's best used on. Okay, especially in trending pairs. All right, it filters out sideways noise and keeps you aligned with momentum. Now, the next strategy that we are going to be looking at is the breakout from consolidation zones. Okay, this is the second strategy that AI flagged as high performing strategy. Okay, and this is the setup. Right, here's the setup. You have to identify a clear range with multiple touches on support and resistance. That is exactly what I'm trying to identify right now. You need to have a clear range. Okay, let the range be a verified one. All right, with multiple touches of the support and resistance zone. Okay, I think we have something like that here. You can see that this was actually a ranging market. Yeah, I can even add this to it. Yeah, this was a ranging market, and you can see this touch here, this touch here. This one didn't exactly get here. This one touched, and then these ones we are kind of uh you know it wants to give the vibes of a smaller range within a larger range, right? But in this case, this section was breached, and then this section was respected for the support here, here, and here. These ones did not exactly get to the top, so let's just work with the larger rectangle. Let's work with the larger rectangle. So generally this was a ranging market, with several touches. Okay, so after you identify the clear range, the next thing is to mark the zone. You can just use a rectangle to do that. Then you wait for a strong breakout candle that closes outside the zone with volume. And you can see that a candle happened here, right? This candle here, you can see that we had a close below the zone. Then the next thing for you to do is to enter on the retest of the breakout zone. We had a retest here, as you can see. So we can just enter our sell trade around here after the retest. Then your stop loss is going to be inside the range. All right, you have to take a stop loss inside the range, because if this breakout is legit, the price is not supposed to get back inside the range properly. Okay, so you can just go maybe somewhere around 1/3 of the range for your stop loss, and then your take profits can actually be around the next major level. All right, so you can target support level if it is a sell trade for your take profit. If it's a buy trade, you target resistance level. Now the third strategy that we're going to be looking at is scalping on 1 minute with smart zones. Okay, scalping on the 1 minute with smart zones. So now for aggressive traders, AI pointed to a 1 minute scalping strategy using supply and demand zones. So the first thing you have to do is to identify clear institutional zones on the 5-minute chart. All right, so once you identify clear institutional zones, okay, let's say for example we're going to be looking for an order block. So we actually had a break of structure here, right? We had a break of structure around here. So what was the candle that led to that? This is the bearish candle, the last bearish candle before that impulsive move, right? So this is the last bearish candle before that impulsive move, meaning that we have an order block around here, right? So this should be our institutional zone in this example. Okay, so let's just use a rectangle for this. Okay, so this is going to be our institutional zone, right? An order block. So after you've identified the institutional zone, the next thing for you to do is to drop down to the 1 minute and wait for price to enter the zone. Okay, so when price enters the zone, just look for a market structure break or maybe an engulfing candle. Then you enter with tight stops and just target maybe 1:2 risk to reward quickly. Then you exit completely or trail with momentum. So it's quite a fast, it's a fast strategy and a quick and effective strategy. All right, that is used on the 5 minutes for identifying the order block or the institutional zone, and then 1 minute for execution. So the next strategy we are going to be looking at is going to be the smart money concept with liquidity grabs. Okay, that's going to be our fourth strategy for this video. So AI also highlighted this concept that involves liquidity grabs and mitigation blocks, and here is how it works. You have to identify equal highs or lows. All right, once you identify equal highs or lows, okay, let's see if we can find something like that real quick. Okay. Let's look for equal highs or lows. Okay, I think we have equal highs around here. So basically, when you identify equal highs or lows, the strategy says that you have to wait for a fake out above or below these levels. So if it is a resistance, you wait for a fake out above the resistance. Then you enter on the return into the order block that caused the move. All right, then your stop loss is going to go outside the liquidity grab. So if we are going to be entering a sell, as price broke above these equal highs and came down back, okay, so if we enter let's say okay, you have to identify the order block that caused the move, and when you enter on that, you have to set your stop loss outside the liquidity grab. then your target could be the next imbalance or the opposite liquidity zone. Okay, you can also probably pay attention to support and resistance zones. Okay, but the main target is going to be the next imbalance or the opposite liquidity zone. So this method showed, according to AI, showed high consistency on the 15 minutes and the 1 hour charts. Okay, so AI gave it a high adaptability score, meaning it works in trending and ranging conditions if applied properly. Now, the last but not the least strategy that we are going to be looking at in this video is going to be the RSI divergence with structure. Okay, RSI divergence combined with market structure. So we're going to be adding the relative strength index to the chart. All right, basically you're going to be looking for higher highs in price but lower highs in RSI for bearish setups. For example, you can see what happened here. We had higher high here and we had lower high on the RSI. This is a bearish divergence. Okay, then you have to confirm with a break of structure. All right, when you have a break of structure, then you enter on the first high with confirmation. So in this case, you can see okay, we had a break of structure here. You can see that the price dropped, gave us lower highs, right? So you get a confirmation. All right, the first lower high with confirmation. This is the first lower high, right? So you enter after you get a confirmation candlestick pattern. Your stop loss is going to be above the swing. All right, then your take profits can be the next major support, which is going to be around here. Okay, so you can see in this case, we had a risk to reward ratio of about 2.26. Okay, so AI found this most effective on maybe 30 minutes and 1 hour charts, especially when confluence with support and resistance zones was added. So these are the most profitable trading strategies according to AI, right? Backed by logic and not guesswork. So each one can be adjusted to your style, but they all follow clear rules, risk parameters, and setups proven to work. If this gave you real insight, smash that like button right now. Make sure to subscribe for more AI-backed trading content that actually helps you grow as a trader. Let me know in the comments which of these strategies you want coded or back tested in a live market. Meanwhile, stay sharp, manage your risk, and I look forward to seeing you in the next video.